Who is Derek?
I don't know. That's a very complicated question. I think my house is worth $500,000.
What keeps you busy these days?
Unfortunately, due to COVID, I'm doing a lot of divorce.
We had a lot of restrictions before.
Halifax had a lot of restrictions, and it was very old school mentality for a year.
I always believe in creating something that people need.
Well, I don't want to give away my secrets for success, so I'm going to say be rude and take a long time to do your appraisals.
For me, I don't charge a fee to client anyways.
I'm going for more than 30 years now. Myself and the other two partners bought the company, the Nova Scotia portion of the company. I still love my job.
That's why AI cannot replace it.
On today's episode, we are going behind the scenes of one of the most important and most misunderstood parts of the real estate process, the appraisals. Whether you're buying, refinancing, dividing assets due to separation, or restructuring debt, the number that goes on the appraisal report can make or break a deal. So I wanted to bring on someone who lives in this world every day. My guest today is Derek Bellefontaine, a real estate appraiser with Mari-Tech Appraisals and Inspections Limited, a firm that provides residential and commercial appraisal services across Nova Scotia and works with lenders all over the province. Mari-Tech is known for objective, data-driven reports and tight turnaround times. And Derek is one of the appraisers on the ground helping home values and investment properties in our market. He's been the eyes and ears for the banks and lenders on countless files, and today we're going to unpack how appraisals really work, what actually drives value, why some reports come in lower than expected, and what buyers, sellers, realtors, and mortgage brokers can do to avoid nasty surprises.
All right. Well, thank you so much for coming down.
Oh, happy to be here. Thanks for asking me.
I know you just got back from Cancun not too long ago.
Yeah, it rained 4 days of the 7, but that's all right.
Hey,
We made the best of
Cancun.
it. I was still in Cancun.
I would be drinking there, so I wouldn't care about the weather.
I may have had a beverage or two. Yeah.
So, Derek, today we're going to talk about appraisals. But before we do that, I want to talk about you. So, Who is Derek? What do you do? What does your day look like? And what do you do outside of being an appraiser?
Well, who is Derek? I don't know. That's a very complicated question, but I used to be I studied jazz years ago, and you asked earlier, what the younger Derek wanted to be.
Like 80-year-old Derek. What do you think about becoming an appraiser?
He probably wanted to be a superhero, or the next greatest American hero, or whatever from that show. But I think I always wanted, from what I can recall, I wanted to be a musician, and I was a touring musician for many years. I was very fortunate to tour around with some great musicians, some recording acts and stuff like that, and I had a lot of fun. But then knew that there was a shelf life to it, and it was either continue on in tour buses or get a real job. So I decided to get a real job when I was roughly 30, and I got into appraising because I needed my house at the time appraised, and the appraiser that came to the door was a guy I knew from high school. He told me about the occupation, and I had no idea of it. And I thought it was interesting. I've got a bit of a construction background as well, so it really interests me. So I think 6 months later, I was working with him after taking the courses and going through the proper steps and procedures and stuff. And I was working with him, 6 months later.
Before I ask you more questions, I want to know, who was your favorite superhero?
Who
is your favorite superhero still?
Probably it's got to be Superman.
Okay.
It's got to be, yeah.
Okay.
Yeah.
Derek is a Superman fan.
Yes.
So that was a quick decision, hey? 6 months still. A lot of people, they think about, they look at something, they want to do it.
Yeah.
They just spend a lot of time researching if that's the pivoting thing that they want to do, and would it be good? So 6 months into it, what exams, what do you have to do to become an appraiser?
Well, now you need a university degree. At least I think they still require that. But when I started, that was 22 years ago. They didn't require that at the time. So I just I had to take a course through UBC,
Okay.
and then you have to take a standards and ethics course, and then register yourself and get your insurance, and away you go. You still need a co-signer until you get your designation of CRA.
Got it.
Yeah, which
we do.
I attained, I think, in 2011. 2010, 2011, something like that.
So that's how that works. So, because we see a lot of appraisals that come from Mari-Tech, but they have co-signer and you're on there.
Yeah.
Okay.
So myself and the other two owners of Mari-Tech are the co-signers for the candidate appraisers.
So what's your day-to-day life looks like? What do you do outside of when you're not, on the road, taking photos of homes?
My day-to-day life outside of work, it's not much time outside of work, to be honest. Thankfully, my wonderful brokers, much like yourself, keep me very busy. So, and I enjoy it. After 21 years, I still actually really enjoy my job. So, I'll be writing reports in the evening sometimes when maybe the hockey game's on and stuff like that, and as long as it doesn't distract me too much. But outside of that, my wife and I like to travel. We've got rescue dogs that we take care of as well. And we love going to dinner and traveling and enjoying life, really. I mean, I've got a wonderful daughter that's gonna have her first child.
Okay.
So I'm going to be a grandfather for the first time. So I'm enjoying that as well. Yeah.
Oh my goodness, you're gonna be busy after that.
Yes, I'm going to be even more busy.
Even more busier. Yeah. Wow.
Yeah.
So you won't have your weekends anymore, then, I guess.
Then probably not, but
hey, that part you don't want to have weekends if you have a grandkid.
Yeah, that'll be fun. Yeah,
it's just a lot of fun.
Yeah.
I don't have grandkids, but I can tell, they will be amazing.
Yeah.
So, from talking about your day-to-day life, I know you're a hustler. I love you for that reason. And that's why I love working with you. But tell me a bit about, appraisal life. A lot of people that are going to be watching this show, they're not going to know what a home appraisal is, because a lot of people buy their homes with 5% down payment. They never go through that process. Is it important? Why is an appraisal important? And what are the details that you usually put down in an appraisal when you go look at a property?
Well, the first question, why is an appraisal important? It provides an unbiased opinion of value and what we feel the property is worth at that moment in time, had it been either marketed for a reasonable amount of time prior to or just in its current state. Sometimes we do retrospective as well, where we'll go back in time and determine the value at that time. But it's important because we're essentially an unbiased opinion of value. Sometimes realtors, they want to tell you the number that they think will get your business. We have no vested interest. We get paid X amount of dollars, and we determine that value, whether it's high or low. We don't get paid any more or less. So we have no interest in if it's good or bad. I do frequently get asked if it's maybe a divorce or something, one party will like the value higher or lower, and I always tell them, you're going to get what you get, and I can't promise you any number. I can promise you that it will be an honest opinion. And that's what you get. That's when an appraisal will get you.
So where does the data come from for an appraisal? So let's say somebody, a couple bought a house 20 years ago. It has gone up in value a lot. You go take a look at the photos, but then, maybe there's one house that was sold nearby that was comparable. But how many houses do you have to do comparables?
A minimum three comparables.
And then so what would you do? How do you drive that value? Like, how do you get to that value if they say, our house is worth $500,000? The house down the street just sold for $425,000. So how do you explain to them, hey, your house is not worth $500,000?
That's it. And I tell them that all I'm doing is, because sometimes they'll say, how do you come up with the value? I don't come up with the value. All I'm doing is interpreting the data.
Right.
And the data tells me the value. So I take that house that sold just down the street that's identical to the subject house, and I might adjust for a few differences, but likely it's going to come in at around that purchase price or that selling price. So when people when that homeowner says, I think my house is worth $500,000, well, that's because you have a vested interest. I do not. I'm going on the data, and unfortunately, it's going to be worth around that value.
Makes sense.
Yeah, yeah.
So what keeps you busy these days? What kind of appraisals are you doing? Is it more towards purchases, more towards refinances?
Well, it is still a mixture of both. Unfortunately, due to COVID, I'm doing a lot of divorce.
Really?
I've never done more. In the last 2 or 3 years, I've never done so many separation appraisals.
Okay.
Yeah. But it's mainly for the purchases. The market is still hot. So the purchases, they need to be done fairly quickly because there's usually somebody else in the wings waiting to, if that offer falls through, they're waiting to buy it. So that's keeping me busy. The refinances, with the interest rates having gone down again recently, that's getting things stirred up, and people want to refinance to do renovations or anything like that.
Okay.
So it's all keeping me busy.
So Derek, we're getting a lot of requests where people are trying to add additional dwelling units, so ADUs, on
yes.
those properties.
Yeah.
And we've done some appraisals where we asked you for, based on this renovation quote, what do you think the new property value would come in? Explain to us about that. Like, are you seeing a lot of those too?
We're seeing quite a few of them. We're seeing a lot of basement suites being added, but the secondary backyard suites, we're seeing a few more and more as well. And we've only recently, I think I've only recently seen 1 or 2 sales of properties with backyard suites, which is great. That's great for data because, pardon me, we typically don't have a way to value those. We know the cost of them, but that's not necessarily the value of them. It may cost $200,000 to build one of those, but until we see like a paired sales analysis and recent sales of those properties, we've got nothing to go on. So we don't have any contributory value. So now we're starting to see that they're adding maybe $100,000, $150,000 to a typical property.
Costs that much to add another dwelling?
Well, it costs about $150,000 to $200,000 to build some of those, and I've seen some nicer secondary suites and backyard suites, but they're still you're not getting dollar for dollar for them. No, I mean it's rare that you get dollar for dollar for any return on investment for anything really.
Yeah, no.
But there is data showing that they're worth. They're worth more than we originally thought, because I think we were only adjusting maybe $50,000 because we had nothing to go on.
So it was mostly on cost-based approach versus, direct comparable.
That's right. Yeah.
Okay.
And now that we're seeing, we're starting to get some data where there's actual sales with backyard suites. Now we have something to go on.
It's interesting. We had a client who was going from 2 units to 4 units in his house. The cost came up about $237,000 to do that work. And, we can go up to $1.5 million for those properties. Actually, somewhere around that number. And the property value after the appraisal came in around 1.4. And they bought the property for $800,000. Now they're putting in 230. Property's worth 1.4.
Seems like a no-brainer to me. Yeah.
So do you think with the city, like moving towards adding more dwellings, and because we had a lot of restriction before, right?
Halifax had a lot of restrictions, and it was very old school mentality for years. And now that seems to be a new generation is coming in of city council, and they're just trying to. Now they're almost fast tracking everything. Whatever you want, almost, to a degree. They're letting, these backyard suites go in because nobody knows how to really deal with them, and we need housing. We just need housing. So they're doing whatever they can to permit these to be either constructed or renovated or whatever.
Do you see there's still a lot of demand for rental units?
Oh yeah.
Yeah.
Yeah. We're still seeing. Almost the hot spot now is like a Lower Sackville.
Really?
Where they're taking the older bungalows and the older split entries that maybe 40 years old, 40, 50 years old, and they're tired, and the people who probably lived in them for 40 years are ready to move out and maybe go into a retirement home or something like that. And we're seeing people buying those and renovating into 2 units and in some cases 4 units.
Wow.
I just did one the other day. A builder that I know, I've done a number of his properties. He's buying it and he's making a 40 unit.
Wow.
Yep, he's done this half dozen times now.
Wow.
Yeah.
That's good. If you just do one project a year, this could be somebody's side hustle, if they've got great income.
He's doing well because it's just what you said. Yeah, I think he's buying it for, roughly $400,000 or $500,000. And once it's done, it's going to be worth well over $1 million.
So it's an easy way to make $500,000 a year. Just buy one unit.
Wouldn't say easy. He works for it, but it's a way to make a decent buck.
Absolutely.
Yeah.
I say if somebody has a job, right, and they work 9 to 5 and they make minimum wage, they can come up with a property in a desirable area that they can buy, and they have enough savings to do these projects.
Yep.
The problematic part probably is the actual work. But in my opinion, nothing's easy.
Completely agree, yeah.
You'd rather pick, go in a job that you hate 9 to 5, or you come up with a project like this where you're now actually involved in building something that people need.
Yep.
I always believe in creating something that people need.
Yep.
They can use it for generations, and it's going to be valuable in the future. Now and also in the future.
Yeah, and that's exactly what he's doing with these properties. Yeah,
that's an interesting idea. You probably gave somebody, one of the viewers, maybe a business idea.
Hopefully, there's a lot of people jumping on it right now, and that's why I say we have to act fast in our appraisals, because when these sales come on the market, people jump on them. So. Right. Time is very important. We've got to get our inspection done and the report done. So that's why you had asked earlier what's maybe about our success or something. But our turnaround time is very important. Turnaround time is huge. I know some firms that take up to a week to get reports completed and back to the lender. That's unacceptable. As far as I'm concerned, we want it the next day. They want it as soon as possible.
Yeah.
So. And I know, much like yourself, the brokers, everybody's waiting for things. Nobody wants to wait long.
Oh, yeah.
So we got to get things done. And technology is helping us with that.
Absolutely. Well, remember last year we were talking about, you being one of those top sponsors for our 2025 Customer Appreciation event.
Yeah.
One of the reasons why we partner up with Mari-Tech, and particularly working with you and your team, the service, beautiful. I would say, if somebody asked me, hey, I'm like separations or one of these additional dwelling units, or common one is the CMHC buyout appraisals these days.
Yes, yeah.
They ask me, hey, do you know an appraisal company? Yeah, Mari-Tech. It's the service is what is in your DNA, and that's what we love working.
Yeah.
With Mari-Tech, of course.
Yeah.
And again, this is not an issue on my end, but customers really think their properties are worth a lot. So give you an example. Client bought a house a year and a half ago.
Yeah.
And you did not do this appraisal, or your company did not either. And I don't know who the company was. We had to order it through a direct appraisal company, right? And property value came in $100,000 less than what the clients thought that their property should be worth. Why do low appraisals happen?
Sometimes it happens just negligence. Obviously, there's errors, in every industry, and there's good and bad professionals in every industry. But sometimes it's just bad data. It could be, there could be an outlier that appraiser used that brought the value down or brought the value up at that time. And we know that 2 and 3 years ago now, I guess, people were just paying way too much and way above asking for houses just because they wanted it and they didn't have a choice and they had to get something. Right. So they were paying for it.
So are these properties now seeing lesser values from what it used to be before?
We have seen a couple of them.
Okay.
And luckily the homeowners knew to expect that. They knew they paid too much at the time, but again, they didn't have a choice. So it will eventually it'll be okay for them. But right now they're upside down in their mortgage, I guess it would be. But that will level out. Real estate always levels out and appreciates over time.
So how does this, from a lender perspective, right? If you work for a lender, you're submitting an appraisal to a lender. From their perspective, what do they look for when they're looking for property values? They're looking at the comparables as well that you use, right?
Yeah.
Have you ever had a lender come back to you and say, hey, we think the property value is way too much?
Yeah, I have at times.
Really?
Yeah. And I will look at it. I'll consider it. I will never dig my heels in and say, no, you're wrong, without even going back and looking at it.
Okay.
But I have lenders that come back and had concerns that it was too high, and I'll go back and look at it, and 9 times out of 10, I'll be like, no, I honestly think that's my opinion of value, and I think that's where it sits.
Because you back it with the data.
That's right. Yeah.
Okay.
And sometimes what we have to do, they'll just ask us to put more data in, more comparables. So
Yeah.
Sure, no problem, we can do that. Yeah.
I love your industry because, data is pretty much your best friend. You back it with the data. Here are the facts. This is why this property value is this. So if somebody says the property value is too low, here's the data.
Yeah.
If somebody says the property value is too high, here's the data. So unbiased opinion, right? That's really, I think it's pretty good.
Yeah.
How do you manage expectations when you have a realtor involved in a purchase transaction? Property value comes in $10,000 lower than what they've listed the property for, and then their seller has an accepted offer for that price, but the appraisal comes in $10,000 less. How do you manage that expectation?
That's a tricky one. That doesn't happen very often, but there was one that I remember doing during COVID when I couldn't meet the purchase price, but in that situation, I had a recent sale on the same street of almost the identical house, and that sold for, I think it was about $50,000 less than these people were paying this house for, and I just couldn't justify the purchase price. So they had to. I came in, I think it was about $10,000 or $20,000 short of the purchase price, and I had all the adequate data. It was all right there. So they had to come up with $10,000 or $20,000 extra out of their own pocket.
We're seeing that now as well. So I used to see that a lot in COVID time.
Definitely COVID time, yeah.
Early 2021, 2020.
Yeah, yes.
I had my own good friend of mine buying a house. We did 2 appraisals for his property. 2 appraisals that both came in lower than what he was paying for.
Yeah.
So he had to come up with the property and the extra money by himself.
Yeah.
But I never thought that now that would happen.
I haven't experienced that recently.
We're recording this in November 2025.
Yeah.
So we had a purchase this just closed 2 weeks ago. Had to order the appraisal through one of the lender partners, and because they had to go through that, we couldn't do it directly with any company. Had to go through. They picked somebody, and they challenged it too because the property value came in like $8,000 less, $7,000 or $8,000 less, and my client was like not happy.
I wouldn't think.
Right, my realtor was not happy. But the data backed it up. So, and they went back to the seller, and the seller's like, listen, this is my price. This is what I'm thinking that this is going to sell for. If you don't want it, sure, you don't have to buy it.
Yeah.
But then my client really loved the property, so they paid the extra money to buy it. So
Yeah.
do you anticipate now with the rates coming down, there's less demand than there was before?
There is a little less demand, yeah.
You can compare Toronto. I look at GTA, not just Toronto, and I look at GVA, the Vancouver area, and also Calgary. To be honest,
Yep.
very interesting spot.
Yeah.
Booming for the longest time, and now you're starting to see the valuations come down a little bit.
Well, yeah, especially the Edmonton, Calgary area,
Yeah.
that has what we would say would almost dried up a little bit because values have definitely come down there. Demand is way down from what I know of, from what I'm seeing in some of the articles that I've read and stuff like that. It has affected. Toronto and Vancouver are always going to have, they're such large markets, they're going to have the drastic ebbs and flows.
Right.
It's always in every large market, always going to happen. Halifax being I think we're comparable to like a Winnipeg market.
Okay.
We are less affected by the ebbs and flows. Goes up and down slightly, but not as much as the larger markets.
But I transact on, I'm licensed in multiple provinces, of course, and I get to see the data there. We get to do the appraisals there, market rents there too. And we're seeing a little bit of softness. So when we go to our industry events, they give us data. Oh, this is what the projections are looking like. This is what's going to happen. This is what we're thinking in 2026 is going to be. This is what 2025 has been. This is compared to 2024. Do you have some industry events that you go to or you get data from, and are they projecting something for 2026 here?
Yeah, they're predicting. It's funny. My business partner and one of the other owners of the company, we were just discussing this the other day, and he was told from his contacts and stuff at the banks that they're predicting 2026 to be quite busy, because they're all going to be renewing mortgages from 2021 during COVID, when everything went crazy. All those mortgages are coming to maturity or to be renewed in 2026. So they're predicting it to be quite busy.
Have you ever seen any lender requesting an appraisal at the time of renewal because they just want to know what the property value is in today's date?
Yeah, from time to time.
Yeah?
Yeah, we get that. Yeah.
Okay.
But it's looking promising.
Okay.
I mean, we haven't slowed down since 2020.
That's good for you.
When COVID hit the world and everything shut down, we thought, oh boy, this is going to be bad. And it was bad for about a week, maybe 2 weeks. And then it went crazy. And we still haven't stopped.
That was slow because nobody could do anything.
Nobody, yeah. And nobody knew what was going to happen.
Yeah.
So we either thought the market was going to tank.
Yeah.
A lot of people did. And it just did the opposite.
I remember March 2020. I'm sitting down in the branch. I used to be a manager at a branch at that time. And I was helping one of my advisors. He was sick. So, COVID time, this was like before the shutdown kind of came in.
Right.
Like March, 17 or 16, something like that. And our branch shut down after that time. And we were doing a mortgage for a client who was getting a separation and they needed to buy out the other person. And we were doing appraisal at that time.
Right.
And literally when the appraisal was scheduled, it couldn't be done at that time.
Yeah.
And it got delayed for like way too long.
Oh, yeah.
Way
No
too
doubt.
long.
Yeah.
I don't think, now, any industry, if you are good at, provide good service, you will be busy. So a lot of people that watch this show are people from the industry, actually. Some clients as well, like customers, future potential customers. But for you and I, a lot of people that are going to be watching this is going to be for those business partners, those mortgage brokers, lender partners, and also, of course, real estate agents. So what's your kind of like a message to them for 2026 here?
Well, I don't want to give away my secrets for success. So I'm going to say, be rude and take a long time to do your appraisals. And no, my philosophy is being as polite and courteous as possible, because I'm going into people's homes and I'm an intruder. They're allowing me in there. I'm going to be as respectful as possible. I mean, we come across so many different nationalities, and everybody has different ways of accepting visitors into their homes, and we've got to abide by that. That's their space, and then being respectful to our brokers and being efficient. That's huge, and keeping them in contact.
When you were telling me about the word intruder, I was like, I want to ask you this. This was not on my mind at all, but now it is. Do you ever get anybody saying, "Hey, no, you're not allowed in my house"? Have you ever had that?
Yeah, every once in a while we get people that are just do not want pictures taken. A lot of lenders want us to take pictures of every room and include those into the report. Some people are just adamant that they do not want pictures taken of the inside of their house, or they don't want people walking through their house. Yeah, and I have to accept that, but then sometimes I just can't complete the assignment. because the lender needs me to do my job, and if I'm not allowed to do it fully, then I can't complete it.
Do you call the broker or the bank and say, hey, I can't get this thing done because your client's being too hard?
Yeah. There was one just very recently, and she just didn't like me for whatever and there was a language barrier, so it might have been a bit of that. And I was actually, I will be honest, I was 10 minutes late for the inspection, and she was not happy about that. And so she didn't want to let me in at first. So I had to go back out and call the agent, the real estate agent. This was for a purchase.
Okay.
And he wasn't surprised. So he must have dealt with this homeowner before with certain situation. And he had to call her to convince her to allow me in. And I had to put on a certain pair of shoes to go in. I couldn't wear. I mean,
She gave you that?
oh yes, yeah. And I was not allowed to touch any doorknobs or anything like that. And it was just, people. There's all walks of life, and
That's why you
everybody's
tap dance
different.
to work every day, right?
Yeah,
Makes you very interesting.
Everything is different every day.
So talking about photos, that is an interesting one as well. We do a lot of like rental properties.
Yeah.
And almost every rental property needs an appraisal. They do get sometimes AVM, like automated appraisal,
Yeah.
but I would say 99% of the times you do need an appraisal for rental property. So do you have tenants that are not happy living there and they're like trying to share their stories about, hey,
Oh yes, there are gripes about the landlord, and oh yeah, we hear all that, and we have to sit. I don't want to say we have to sit there and take it, but we sit there and listen to them. But I mean, we do take it with a grain of salt 9 times out of 10 because they just don't like the amount that they're paying for rent, but that's an agreed upon price, so it's not for us to decide.
Whatever they tell you, does that ever influence your decision making in terms of
Not very often. But sometimes they'll tell us maybe about either a leak, maybe something that happens in the foundation that the landlord wouldn't have told us about. And, it certainly would affect the market value. I mean, we've got to take that into consideration.
That's pretty good information.
Yeah, yeah.
Maybe like a landlord will try to hide it because that could influence the value, but the tenant having a conversation with them might get you the true property value.
Yeah, exactly. Yeah.
Very interesting.
And that has happened in the past more than once.
Wow.
Yeah.
Do the tenants ever say, hey, don't take photos of any rooms?
Yep, I've had that, and I have to abide by their wishes. And then all I do is when I do have the report, I tell the lender I was not permitted to take photos of this room. And if they want to accept that, then that's up to them after that. But I deliver all the information I can to the lender, and if it's not enough, then that's up to them if they want to accept that report or not.
Okay. Talking about investor properties, we do a lot of, rental properties, a lot of investment opportunities. I'm doing one for a client is like a big portfolio, certainly the one that you did recently where the client had like a $15 million portfolio and we were doing like 4 or 5 properties in just one day.
Right.
Like block out your whole day to go do it.
Yeah.
That's a lot of like managing tenants and all that kind of good stuff.
Yeah.
What's your like biggest challenge, I would say, with the investor portfolios? And then when you're trying to do a property valuation for somebody, something that just got built up. Right? They bought a house 2 years ago, tore down, built a 4-unit or 6-unit building there. How do you get the data for that? Like you just compare with like a 6-unit or?
Luckily, I've done for that one. I've done enough that I have data to like the 4-unit that's being constructed in Lower Sackville. Even when I was driving away from that property, I knew which comparables I was going to use because I had done a couple of those. So that helps. You usually have to go outside of the area to get data, reasonable comparables, but you can adjust for location and stuff like that. But luckily, I've done enough of them that I knew exactly what I was going to draw on for the report. The other question was how do I manage expectations when I'm doing a bunch of rental properties for one owner? That's a tricky one because if one property comes in a little lower, then usually the other ones are a little lower, and they're paying a large sum of money for 4, 5, 6 appraisal reports, and all of a sudden they're a little too low. Sometimes the deal doesn't work, and now that owner is very unhappy with paying a large sum of money for something that's kind of worthless to them. And that's happened, and it's unfortunate, but again, that's our opinion of that value, and that's what the banks have to go on. That's why we're here. We're working for the lenders. We're working for the banks and the private lending institutions that can't, they can't go and view all their properties, so we're their eyes and ears.
We do a lot of transactions, like, personally, I do a significant amount of deals in a year, and I would say, like, we don't have that issue with the property values, like one or two, or maybe like 4 or 5 properties in a year that we might have to get. Like, for example, one appraisal I did recently, it wasn't your company, had to order through some, that's why we love working with you, because like, if we can work with you, you just know the 20 years of experience, also a team of people, three business partners, and then like an army of good appraisers that you hired. Like, kudos to you. It takes a lot. It's a people business. If you don't have people that are doing a good job, you don't have a business.
Yeah, you're right. Yeah.
And, a lot of people say, good appraisers. No, it's who you hire. Your A team, right?
Yeah.
We had an appraiser company that appraised this property for a good realtor friend of mine. Okay? She's probably going to know who I'm talking about. Their property was not on native land. The appraiser put in it's on reserve land.
Ooh.
And then the lender goes, file canceled.
Yeah, that's a huge red flag.
They initially had those questions, and they're like, no, it's not on native land. The appraiser came in, they're like, we told you. I was like, no. The realtor told me it is not on native land or reserve, because, we can't do properties or financing for properties on native reserve lands.
Yeah.
And then it went back and forth for almost 2-3 weeks. The appraiser came back and apologized, corrected the report, and they just funded a couple of weeks ago.
Wow.
But that was like, it's not in my control. But the client's super mad at me. But then basically, I gave the report to them.
Yeah.
I was like, look at it. You can tell me what's wrong with this. And then of course, realtors, they know so much about the deals. Just like yourself, you're going in the market, you're seeing the properties, you know where's what and what's where. It was crazy, to be honest, but we got the deal funded because I can't do anything.
Yeah.
I don't influence appraisers' work or say that, do something like this because my client doesn't think that it's on native reserve land. That doesn't mean it is not. It could be.
Yeah, but I'm surprised it took so long for whatever, either the appraiser or whomever, to get back to you and to get that corrected. I mean, that should have been corrected right away.
We didn't use you. If we had you on there, deal would have funded 2 months ago, honestly. It took so long to get an appraisal scheduled, and it took so long to, of course, get it done. For us, speed is everything, just like yourself.
Huge.
Right?
It's huge, especially in today's market and today's lifestyle and environment. Everything is happening fast.
Yeah.
So, technology, we've got to use technology to our advantage. I mean, much like this chat GTB, everybody has to get on board with stuff like this because it's changing and you've got to roll with it or you're going to be left behind.
So how is AI or technology impacting the appraisal industry, good or a bad way?
I don't know if it's either one yet.
Okay.
I have been reluctant and just had no time to dig into it. But a good friend of mine just this morning showed me how AI works very well. So he's opened my eyes to it.
It's good to know that I'm a good friend of yours now.
Well, yeah, I certainly would consider that.
Did it boggle your mind? You're like, oh my God, this AI is like.
It opened my eyes for sure because. I think I just thought it was a tool to help you write, an essay or an email response to an email or something like that. But there's a lot more to it than Yeah, I know. So I've got to start digging into it.
It won't replace your job. I think it will make your job better.
Well, if it can make my job, if I can do a better job for a better product for my clients, and if I can do it faster, and if it gives me even half an hour extra free time a week, then I'm all for it. You know, time is our most precious commodity, and we can't get more of it.
Yeah.
So we've got to maximize it.
There's a realtor, sorry, not the realtor. There's a lawyer that I met a couple of weeks ago, and she might be watching this podcast. And I literally bought back 1 hour back in her day, every day, with just one advice that I gave to her. 1 hour, lawyer's time, it's a lot of time.
That's a
It's a
lot.
lot of money. We did the math over a year, it was coming up in hundreds of thousands of dollars.
Wow.
So that's just one. And then she just started using it. Eventually it will be 2 hours in a day, because I get about 2 hours a day back in my time, but just using this technology. I'm all about technology, by the way. I do mortgages, but I'm such a tech nerd. Like, I love technology.
Yeah, and I'm not that guy, but I've got to get into being that guy.
Just get a Tesla, because you drive a lot. Put it on autopilot.
Yeah.
I know. I should give you a tour. You're going to love it. You're going to be like, what? It drives by itself.
Yes, a couple buddies of mine have one, much like yourself, and they love it. They stand behind it. Yeah. So
it's about, the future is buy back your time. Big advocate for anything that can help buy back your time. Just like the technology I showed you today, it'll help you buy back maybe a couple of hours a day. Let alone just by spending very small percentage of money. But going back to your job, it won't replace your job. Because a lot of people think, it's going to replace people.
yeah,
It will definitely not replace my job.
no,
Make my job a little bit easier. Just like a nurse, a nurse has to, you can't get an injection into a body without any emotions. You have to talk to the person, you have to make them comfortable, to bring emotions, and that's something technology cannot do.
that's right.
Cannot bring emotions.
Yeah.
It's very cutthroat. Do this. That's what's going to happen.
Yeah.
But I recently found out, and this was me ChatGPTing trying to test the limit. And I don't think I've tested any ChatGPT's, limits yet. It has started to take a little longer to think about the things that I've asked ChatGPT.
Yeah.
Because before it was like, hey, what is this? And it will come back and right away it will give you an answer. Now I ask, okay, what is this and how does this do? And it will just taking longer to get a better answer for you. And I pay for ChatGPT a lot of money.
Yeah, there's a free version, the paid version.
The free version is faster. The paid version is a lot better.
Yeah, that's what I've heard.
I want money. Basically what it is.
Of course.
But I had a client, he was looking for a particular property. He's like, oh, well, the pre-approval that you told me, we can't get anything for that price. And I was like, let me see what's on the market. I don't even go to realtor.ca anymore. You go, looking for a property, this many bedrooms, price range this, in Nova Scotia, filter this down.
And it spits it out for you.
And I was like, yeah, ask your realtor to go show that property to you. These are the properties that are in the market, in those, in that price range that you're looking to buy. So I think maybe down the road, I don't know yet, but at some point, we'll be able to hey, I need comparables for this property. Show me that. Might help your job a little bit better, but you still have to do so much of the variance part, because that part, I don't think technology can do just yet.
Yeah, but now here's a question for you with using AI and that technology, and with the industry and with the general public knowing that you're using that to your advantage. Do you think they would have an issue with you charging still the same amount of money for whatever your service be, knowing that you've done less work theoretically done less work, and you've used AI to do some of your work? Well,
because you're not paid by the hour.
Yeah.
Your job is not by the hour.
No.
Lawyer charges a flat fee of $1,000 or $1,400 for the lawyer, the real estate transaction.
Right. Yeah.
The other type of services for lawyers are hourly, so it could be different for them. Maybe because it made the job faster. So maybe they don't have to charge their clients as much.
Yeah.
For us, it maybe would be a point where because you don't have to work as much. Maybe you can lower down the fees a little bit. I don't know.
Maybe. Yeah.
For me, I don't charge a fee to client anyways. So for me, my industry, I don't know, like that the client can't really say because they're not paying me at all.
That's right.
We
Yeah,
get paid
yeah.
by the lender.
Yeah.
So basically our job, we find out best solution for a client. We negotiate the rates for them.
Yeah.
Because we do so much volume with some lenders, they provide some extra discounts on the
Sure.
mortgages, which
Yeah.
gets passed on to clients. That's how our business works, and we still get paid by the lender. So
Yeah.
we're connecting client, the bank. We're literally, that's our trademarked logo there. We bring the banks to you. We're bringing the lenders to the clients.
Yeah.
And by doing that, we're getting compensated. We just want to make sure we do a better job for our clients. So we're faster. It doesn't take us 2 days to get back to client. It takes us like an hour to 2 hours maximum. When somebody calls, there's someone available to take the call. So imagine if I didn't use AI and then client called and they got my voicemail.
They're more likely to
Not do business with me.
move on to the next
Absolutely.
down the list. Yeah.
Right?
That's
But
right.
even with the AI technology, you still have to have human touch.
Well, yeah, that's right.
Right? It just
Yep.
helps us to work faster. So I think we're working faster. So I don't know if you can charge more for that efficiency, but no.
Yeah, I mean, theoretically you could probably charge less if you wanted to.
Exactly.
Yeah.
So
yeah.
we can provide more discounts to clients and say, hey, this is what it is. It took us this long. Mortgage business, most of the heavy lifting comes for underwriting. Where you're reviewing the documents. You're
Yeah.
any time we give a pre-approval out, our pre-approval is like worth something.
Yeah.
A lot of lenders, a lot of brokers, they don't look at the documents. They take the data in. Based on the data, they go, oh yeah, we can pre-approve for that much. And a lot of realtors work with us for only one reason. Our pre-approvals are fully vetted.
Yeah.
Take the data. It costs us more because my
Yeah.
underwriter is looking at that. I'm looking at the documents.
Yeah.
We're doing full pre-approval. It's not like, hey, based on the data you provided, because the AI can do that part then.
Yeah.
They can say, I make this much money, these are my liabilities, what do you think I can qualify for? Very easy if somebody
Yeah.
wants to use it.
Yeah.
A realtor can probably just plug it on ChatGPT,
Sure.
right?
Yep.
So when we do our pre-approvals, that part costs money. And the pre-approval is not guaranteed that it's going to go and a client's going to buy or get a mortgage from us.
Right,
It
yeah.
could go to another mortgage broker, another lender, or they may not buy.
Yeah. Yeah.
So I think that is the most, unless I can find a way to automate that part, which I cannot. I can't
No, I
see
don't
that.
think so. Yeah. Not right now, anyway.
Everybody's income situation is different. Everybody's credit situation is different. We have to review everything. We have to rationalize why, if somebody's credit score is low, why is it low?
Yeah.
We had a client who had a 602 credit score and was declined by a mortgage broker who sent it to a bank. They got declined by them. They came to us. They're like, hey, I saw your video about credit score and can you help me out? I'm like, yeah, they own a house now.
That's perfect.
Right?
Yeah.
So if that was on AI, maybe those clients
True
would
enough.
look
That's
behind.
right. Yeah. Yeah. You guys are the saviors in a lot of ways.
Yeah.
You do really good work, and it's I see it from my end. And sometimes I'm amazed. I'm like, geez, I don't know how these guys get it done, but they work their butt off and they got it done for this client, and now this person is in a home. So it's good.
It's the data, the knowledge, and the expertise because so many transactions go through my desk
Yeah.
every day.
Yeah.
We have 8 brokers on the team, and they're doing fantastic. They're all doing deals, so we get to learn a lot. It's like human AI. Like we're getting to learn a
That's
lot.
right. And we're processing it, and
A lot
you
faster.
can reference that. Yeah. Yeah.
Right?
That's right. Yep.
I would have brokers come to me and say, "Hey, this is the challenge." Before the file gets submitted to a lender, we already know what are the things we need. A lot of people figure that out later. They submit a file to a bank, they get it back.
Yeah. Yeah.
Then they're like, "Oh, this is what we need," and clients go, "Oh, I thought I was approved." Well, you were conditionally approved.
Yeah.
Now we need these
Yeah.
things.
Yeah. Exactly. I see that on my end too, and I hear the gripes from homeowners that are either refinancing and they're saying, "Oh my God, this this process is taking so long. I didn't know I needed this. Now at the last minute they're telling me I need this." And
Yeah.
And I'm like, well, sorry, I'm just here doing my job, and I apologize. But yeah, I hear it, from maybe more or less experienced brokers and stuff like that.
So, I think it's going to be an interesting 2026, and I'm very optimistic about going into 2026 because a lot of people are getting discouraged because, rates are not as low as COVID rates.
Right.
Prices are not as low as what they saw before COVID.
No, they're not.
Demand is even higher than what it was before.
Yeah, yeah.
And a lot of people probably will renew and then they will buy another property. So I can see your job's going to be a lot more busier.
I think so.
So are you hiring people?
We are actually. I am. We've got another appraiser starting. I think early in the new year, and then possibly one or two more after that.
Good.
Because we are busy. We have the capacity to take on more, and I'm getting older. I want to step back a little bit. I want to take it easy.
Give your clients to somebody.
Yeah.
Okay.
Yeah.
So if somebody watching this podcast right now, and they're like, "Hey, I want to be like Derek. I want to do appraisals. I want to do this for the next 20, 30 years. I want to enjoy doing it. I love looking at properties. How can they get in touch with you?"
Oh, they can reach out to me. Go to our website, Mari-Tech Appraisals, Nova Scotia, or they can just email me. I'm on Facebook, or email me at derek.bellefontaine@mari-tech.ca, maritech.ca.
But you're a text person, so what can they text you?
Yes.
What's your cell?
What's my cell? Oh, 902-471-3234. Text me anytime.
There you go.
Yeah,
I'm just, this podcast is to help a lot of people out.
Yeah.
You do a good job. That's why you're here. And we want to make sure they can also leverage your services or your team services.
Yeah, absolutely.
To, help you grow your business and help them with the unbiased, approach on the appraisals.
Absolutely. We're always up for it.
So one advice for the people that are watching this, anything you want to share that can help them or helped you that you want to share. I always ask my guests about this.
Piece of advice. I don't know. That's a tough one. Don't worry about, when we do appraisals, your house doesn't have to be spick and span, spotless or anything like that. Don't worry about that. We know that houses are lived in for the most part, so it doesn't have to be, unless there's damage to the property or stuff like that. Don't worry about it. If you want to improve the value of your property, same old rule: kitchens and bathrooms. Don't worry about extending the landscape, the yard 10 feet back that way. It's going to cost you a small fortune, and your return on investment is going to be small.
How about pools?
Oh boy, that's a big one. Pools, in-ground pools add value. Above ground pools, not much. The decking around the above ground pool is probably going to be worth more than the pool itself.
Okay.
Yeah.
Okay.
Yeah. It's going to cost you, maybe $15,000, $20,000, and the return on investment might be 25 cents to the dollar. But an in-ground pool, way more appealing visually, and the functionality is greater. So the return on investment on that is a lot better.
And do solar panels add value to property?
I just encountered this week. Yes, but not as much as anticipated.
So somebody put in $50,000 to put the solar panel system, and their house was worth, they bought it for $600,000, maybe appreciated to $650 now, and they put in $50,000. So do you think their house should sell for minimum $700?
No, not even close. Not even close. It might, because people just the demand for homes with solar panels is just not there.
Yeah.
And it's not the original value numbers that the government had kind of spewed out, or the companies, the solar panel companies, it's not working out that way as good as it was. And Nova Scotia Power, there's issues there with sending your power back to Nova Scotia Power. They're not giving you as much as anticipated. So the value that we're giving is, again, maybe 20 cents to the dollar.
Really?
Yeah, not much. Because
somebody's-
we don't have the data to support much higher.
So 50,000 solar system may only add 10,000 in value?
Yeah, about that contributory value.
Okay.
Yeah, and that's the difference between, a lot of people can't discern the difference between cost and value. Cost may be 50, but the value certainly is not that. It's considerably less.
You're doing my job right now. So elaborate more on this, please. Because a lot of people come to me and they're like, oh, well, I spent $200,000 on my basement renos. My house, I bought it for 400, so it should be worth at least 600,000. And I'm like, no, it is not that much.
Well, you pose the question back onto them.
Yeah.
Would you pay an extra $200,000 for that if you were looking for a home? No, you wouldn't. You know yourself you wouldn't. You know? So there's a lot of times when, and a buddy of mine who was an appraiser as well, he was the one who taught me this, put the question back onto them and get them to answer their own question. And usually they get the answer that is truthful, not what they want to hear.
So I basically did that, but this guy was very adamant. No, my property value should be more. So we ended up doing an appraisal, and it didn't come to the value he was looking for.
Yeah.
But he ended up paying for that appraisal. I could have saved him $500. He didn't want to. He didn't listen.
Yeah.
So thank you for doing my job.
Yeah, no problem. I mean, it's going back to the data, and the data is going to tell you what that's worth.
I think it's good for realtors too, and they can use the same question and say, hey, if a client says, for a realtor, if a client says, my house should sell for $700,000, maybe the realtor should ask them that same question. I don't know. It can be tricky because they want to get the sale.
They're salespeople, so they want to answer it in the way that they think that other person wants to hear the answer. So they're always trying to juggle that. I mean, I'm not a salesperson. I couldn't be a salesperson. I'm just, it's not in my DNA. So, I'll tell them what the data tells me. And
I personally would find it difficult to ask that question. Would you pay for that much for your property? Although that is the right question to ask.
Yeah.
Myself as a mortgage broker or a real estate agent as a realtor, because it might be offensive to them, because they might be like, okay, well, I'm done here, even though that's the right question.
You're right.
Yeah.
And you really got to feel it out at the time too.
Yeah.
Do I think this other person can handle that answer? If I don't think the answer is yes, then I'll steer away from that, and I'll try and go down a different path to get them to that same conclusion. Yeah.
That's why our job is very interesting, and that's why AI cannot replace us because of that reason.
That's exactly right. Yeah.
I think if AI asked that question, AI would probably be like, yeah, your property is not worth this much. And that's why it would not work out. A realtor might be able to position in a different way.
Yeah.
Which is a lot more easier for them.
Yeah.
This has been an interesting podcast.
Yes, I enjoyed this.
We like talking about the truth about appraisals and, about real estate, and tie it together and try to provide value for business owners that can actually implement the things that we do. So how long has Mari-Tech been in the industry for now?
Mari-Tech's been going for more than 30 years now.
Wow.
Myself and the other two partners bought the company, the Nova Scotia portion of the company, I think about 10 years ago.
Wow.
And I still love my job.
How many people do you have now?
We have, I believe, 12 appraisers on staff. We've got a commercial appraiser in Prince Edward Island that we use.
Yeah.
He does stuff here in Nova Scotia and PEI as well. Yeah. And we're probably going to be growing.
So what provinces do you have? Nova Scotia, PEI?
Yeah, we've got our sister company in New Brunswick.
New Brunswick, okay.
Yeah, and we had an appraiser in Newfoundland, but he has since retired, so we're still looking. So
there's a job opening for anybody watching this in Newfoundland.
Yes, exactly.
They want to become an appraiser or are already an appraiser and want to work for a great company like Mari-Tech.
Yeah.
give Derek a shout. He already gave his phone number before. Awesome, Derek.
Yeah, thank you very
so
much.
much. I appreciate it.
Thank you.
I look forward to having you as a sponsor for our 2026 customer
Absolutely.
appreciation event too.
Yeah.
Love it. I'll let you know when the details come.
Way to hit me up on camera so I don't have a choice.
Yeah.